Welcome back, and joining us for a look at the day's markets action is Cobus Potgieter from Southern Cross Capital. Thank you so much for your time, Cobus. The markets are rallying, particularly locally and also in the US. Some slight pressure in the EU markets, but also really encouraging is what we're seeing on the local currency front now, just over 18 Rand 60 against the US dollar. What are the markets holding on to here, considering that inflation is still high in the US, as we saw on Friday? And don't say the markets are rallying because of my outfit.
I was going to say precisely that. I was going to say you need to wear that outfit every day so
Right?
we can see green on the screen every day.
Love that.
It's a bit of risk on sentiment. I always like to say, the market prefers bad news to uncertainty. And to some extent, I suppose, we've grown accustomed to the idea of rate hikes being postponed to the end of the year, maybe getting only a single rate hike the end. And at the same time, there's a bit more of a focus on earnings. Those have been reasonably good, particularly from the big tech stocks, even though there's a little bit of divergence there. And in South Africa in particular, I think the Ipsos poll showing the ANC's support base not deteriorating further, and of course the two threatening parties losing a little bit on a relative basis, meaning that perhaps the ANC can cobble together an alliance with smaller parties that won't be kingmakers in that sort of scenario. The market will see a sort of policy continuity, stability, predictability. And we've seen that not only in the currency, but also in the yields. So that's quite a significant improvement we've seen today. So
Yeah.
generally a bit of an uptick in investor sentiment, particularly in South Africa.
Yeah. Uptick in investor sentiment, even with companies that have disappointed with results. You talk about this divergence that we are seeing there in the tech stocks, Tesla being one of the big disappointments, although really a car company. But anyway, going past the technicalities, it seems that investors have been plowing into the stock recently, and actually even when they did come out with disappointing results. And I'm just wondering, have investors just looked past the numbers and maybe looked to the developments around those numbers and also going forward?
As it goes with tech stocks, investors are always discounting the future heavily. And when you're discounting the future, small changes make big differences. Call it the butterfly effect or the discount rate. And in the case of Tesla, yes, a disappointing set of results. But on the positive front, Elon Musk had a surprise visit to China, and it was very fruitful. Essentially, he got an agreement, a local partnership, to start rolling out the autonomous driving systems that they sell in the US into Teslas in China. And that's seen as a phenomenal development. Yes, they are partnering locally, but they essentially got governmental approval with, of course, a short list of requirements to roll out the technology there. And that's seen as like a massive leap forward in a market where they were slowly losing significant market share from the likes of BYD and others. So looking forward to that. The market is very positive despite the pressure of revenue because of intense pricing competition in the sector.
Yeah, seeming that Tesla is really fighting its way through that competitive landscape there, particularly in that very important market of China. Let's come back home and look at some of the company news that came out. Not a lot. And actually, the ones that did come out with trading updates, they didn't really give a lot of color. Let's start off with Astral Foods. They came out with a further trading statement saying that it's forecasting its bottom line growth to be between 435 and 445% from the prior comparative period. Of course, a low base, but we have seen investors plowing in, that share price surging over 5%. Is Astral taking off and flying again?
It's certainly recovering. Look, it's a tough environment, and to a large extent, they are price takers in both of the big businesses, both the broiler and the feeds business, where they have seen prices stabilizing somewhat. And I assume, again, we didn't get a lot of color, but I assume there's been some mitigation around load shedding specifically. That's a great improvement. We did get a voluntary update earlier. Well, call it no, that was that was involuntary, but it
Yeah.
wasn't with ranges. It was a minimum. So they indicated earlier they would do at least, I think, 6.40 in headline earnings, which is now, of course, as they actually surpassed the financial year and started finalizing the numbers, they could see it was going to be closer to 9 rand. So from the market's perspective, that sort of 6 rand improvement was already baked in, and
Okay.
now they're coming with this sweetener, which is about 50% better. So we haven't seen the color yet. They're still in closeout period, but clearly it's been an even better bounce back than had been anticipated.
Yeah. Well, another company that came out with numbers that are better than they initially expected is Robix. Also a trading update saying that it expects its headline earnings per share to climb by as much as 25%. Kate, to fill in the gaps for us there.
So this is a good example of very poor, excellent disclosure. Robix did the same thing as Astral and issued a trading update way too soon, where they indicated on a voluntary basis, we expect to increase headline earnings between, I think, 10 and 12.5%.
Yeah.
And now they're coming and smashing that out of the park. So that's a mistake. You shouldn't like put an upper limit on it and then go and destroy that upper limit. So that's why we're seeing that sort of excessive reaction from Robix. And if I were the JSE, I would, at the very least, give them a stern talking to, or maybe not Robix themselves, maybe their sponsors or corporate advisors. But of course, it's always nice to get a beat. If this were the other way around, people would have been seething.
Indeed, indeed. Well, let's take a look at a stock that you're not seething at. Your stock pick for today?
My stock pick for today, and somewhat topical, I suppose, with the Ukraine aid being passed through the House and the Senate in the US recently, is a defense stock, Rheinmetall. We don't get exposure to defense stocks locally, so we have to seek them out offshore. It's the fifth largest defense stock in Europe and the largest in Germany, and they do largely what I would call some of the simpler stuff, but they're the world leaders in terms of mechanized armored vehicles. And they do a lot of components that go into other weapons systems. And the other big thing they do, which they actually manufacture locally in a JV with Denel, is shells. Shells is artillery shells, 155 millimeter NATO, is what is fueling this war in Ukraine. So amongst other things, the aid package has freed up financing other players globally to go and source shells on Ukraine's behalf, countries like the Czech Republic. And then there's budget to replenish those shells. Somebody has to replenish those shells, and Rheinmetall sets to benefit. So it's a really nice play. It's already done phenomenally well over the last year, and it'll continue to benefit from the rearmament in Western Europe as well. So from that perspective, it's a very cool play, and quite a bit cheaper than some of the American defense stocks. It yields nicely as well. So it's one of my favorite plays at the moment.
All right. Well, thank you so much for your time and for analysis on what has been moving investors' money today, Cobus. That was Cobus Potgieter from Southern Cross Capital.